Okay, Laurens, Hamerlinck, Head of Fintech Venturing at ABN AMRO.
Hello, everyone. Ankur, Head of Product at N26. Born in the Netherlands, left to the US for 30 years. I'm back for the World Cup.
Awesome. Hey, folks, I'm Parth. I'm part of the issuing product team. I manage the cards product at Adyen. I've been in the banking space for all of my career, and a few years ago, I sort of shifted from banking to fintech. Still doing banking, but more in a tech way. Nice to see you all.
Thank you. Last but not the least, it's me again, back, Mac Mallingham, IWS, Global Financial Services, been with banks in the past for a couple of decades. Happy to be here, helping Banking 50. Thank you, guys. Thank you so much. So the first question, so 10 years ago, right, bank was the only place to go, right? These days, it's not the case. It's a mixture of banks, fintechs. It's just like a button in an app where you went in for doing something else, right? That's the kind of a way it has evolved. So is banking or banking infrastructure getting invisible day by day? That's my question, okay? So let's go with Laurens. What do you think?
Yeah, no, sure. I think it already happened. I think looking back at when I started, we had the whole craze about open banking and PSD2. I think that accelerated definitely a lot. So yeah, it's true, and I think also banks needed to wake up a little bit back then. Like, okay, where are actually our clients active? And that wasn't always, of course, they all came to a banking branch. They were also active on other trading platforms or stuff. So I think banks that are very mindful of like, okay, how do we plug into these ecosystems? I think those will be winners. But yeah, unfortunately, there's also still banks that think like, okay, we have a branch, we have a website, we have an app, and we'll be fine. That's not
perfect. So we can see ABN AMRO is already a winner. Fantastic. So let's flip the coin. Ankur, yes. What's your view? Because you come from a fintech world.
Absolutely.
So yeah.
Happy to answer.
Go for it.
I'm going to provide the hot take here. Banking is not invisible. And I actually will take maybe the counter here. And I think everyone has their own perspective. I'll share mine. So banking, if we look kind of over the course of time, has continued to change because the customer needs have changed. The trust that the customer needs has not changed. In fact, it continues to grow stronger and stronger. And the ways in which they expect trust now involves more channels, more kind of touch points, so maybe a mobile app instead of the branch. But that need for trust in every interaction with the bank has not changed. And so as we look forward, I'll give maybe one example. So today, you might look at a chatbot or a conversational banking assistant in your mobile banking app and say, well, that's a more invisible touch point. But actually, the customer needs for even that communication has changing and evolving in real time. 18 months ago, if you asked the customer, they were responding on a banking chatbot, and you had an instant response, that doesn't feel right. It's not human. Today, if you add a delay to make it feel more human-like, the customer says it doesn't feel Gemini-like or ChatGPT-like. And now they're increasingly asking for voice again. Point is, the change or the need for change in solving for the customer need is changing, but the trust that they expect is the same and will continue to be there. And I think banks play an important role of building that trust, and we're seeing that across the ecosystem.
Perfect. I can see the love in the air. Fantastic, man. I'm loving it. I'm loving it. Right. Let's change some gear now.
Can I just add on to
this? Oh, yeah,
this,
sure.
Right? I think I have a very interesting take. So in my opinion, banking as a pipeline, as an infrastructure layer is invisible, but it's not irrelevant, right? If you look at a Uber delivery person, right? If they get paid right away, they don't care if it's a banking experience. They care it's a great Uber experience, right? So that's the important part. I think there's two layers here, the customer layer where you have the experience, and then there's the pipeline. I think the pipeline layer is pretty much invisible, right? The more invisible it is, the better it is. There are banks like N26 that try to do both the pipeline layer and the experience layer, and that's a very difficult job to do. And those who are doing well are really excelling at it. But most companies are either doing one of these layers, right? The infrastructure layer or the customer experience layer, as we call it. Infrastructure layer, the more invisible you are, the better it is.
That's right, yeah. I agree with that. And I think that's where people like us come into play.
Absolutely.
Thank you for that. I love it. I love the ending, Parth. So, a good few years ago, or maybe a decade ago, I would say, the players who dominate were the players who had branches, right? So we were so used to walking into a branch, having a chat with the managers, coffee, etc., right? So, but things are different now, very different, right? You don't even need to walk into a branch anymore. You can do it from your living room. So what platforms do you think would dominate the distribution layer, particularly when it comes to banking and finance?
Who? Yeah, I think it's very hard to predict because with AI, it really got me confusing now. Also with the previous question, right? So I think the coming years, who will actually interact with banking infrastructure, it will be more and more agents, right? And less people, even within the organization, right? There will be less colleagues, more agents. And I also expect this outside, to be more agents communicating with the banking infrastructure, with the banks. So then the question is like, okay, what channel will that be? Will that be integrated in Claude or Gemini or ChatGPT? Or will that be dedicated PFM apps like Clio or others? Or maybe be banks or neobanks will chip into there? I don't know. I find it really hard. And I also find it hard, like, okay, maybe there's even a place for a physical banker again, but then that will be a paid thing, right? I call it a little bit Hilton banking. So in the sense that, yeah, so I think a lot of it will be democratized, but I think there might even be a business model where you're still going to pay for in the agentic process for a human. And what the real interface will be, I don't know.
Okay. Fair enough.
Even the PIN failed, right? And there were some good people behind it. So I think people are trying and to think about it, and people try to disrupt it because, yeah, can we ever get rid of Apple? But I don't know what will happen, to be honest. But there will be more agents.
Fair enough. Thank you, Lawrence, for that. Parth, you come from a different world. Come on, man.
No, absolutely. I think the platforms that own the end-to-end experience will own the distribution. And that's what we very strongly believe at Adyen. If you look at the geographic spread, right, nobody has been able to replicate a model like WeChat in China. And that's a very strong model. Europe has tried, US has tried, and everyone's failed. So if you look particularly at US or Europe or largely rest of Asia, it's the platforms that own the experience, right? You look at Shopify, you look at expense management companies like Pleo, Spendesk. They are the ones that own the distribution, and then banking is just the layer underneath, right? It's the vertical SaaS companies. Let's take my example, right? I work at Adyen, we do acquiring, so payments is naturally where we shine. And if you plug in the underlying embedded banking, that's where the GTM motion becomes more and more concrete. So I think, in my honest opinion, these are the platforms. And the beauty of it is these platforms are also changing over time. To be honest, agents have now become the new platform, right? You will be able to do transactions on Claude very soon, right? And most are already doing it through their agents. So these are now becoming platforms. If you plug in banking, they become platforms to distribute banking. So it has changed drastically over time. And I still remember the good old days. I was giving chai and coffee to my customers in a bank branch. And that has completely become mostly irrelevant, I would say, in many ways. So that has changed.
Thank you for that. But still, you know, I miss the human side of banking, man. Seriously.
I'm with you.
What it was about...
Can I pick that up,
Oh,
actually?
Yeah, sure. Please.
Actually, I think that's where my head has been at these days, is this human side of banking. So we will have more agents. We will have everything that's been described by, well captured by Lawrence and Parth. But I actually think if we go back, products ultimately, or at least from my perspective, products ultimately serve people. They're built by people for people. Agents, similar to email or anything else, are fantastic accelerators to close the distance from an outcome that we're trying to achieve for people. I think in this moment in time, it's very easy for us to forget that, right? AI slop and content everywhere over LinkedIn. And you know, and I'm in a like full-on adopter, so I'm not suggesting that we shouldn't use AI. What I am saying is we cannot forget what our North Star is, and the North Star is people. Banking ultimately goes back to a business of trust. My father worked at Swift for over 30 years. That's why I was born in the Netherlands. And Swift has been disrupted every year for the last 30 years plus, but it's still there. And my point is, as things are evolving, technology is changing, and there's a lot of interesting things happening in this ecosystem, but if we forget our why, like who are we actually solving this for, then we don't understand our North Star, we can go very fast in the wrong direction. And so that's why I think we have to go back to the customer, to the people. And again, if you serve the customer, the people, with your team, the people, by leveraging anything, email, AI, agents, everything in between, you'll have a business and you'll have a bank. But I think we are losing a bit of the sense of human and people in the broader, let's say, ecosystem of what we see and consume today. And I'm here because I want to say, let's not forget our customer. And you know what? If you serve chai, I'm coming over for some. So I would love to, and I'll be a customer.
Ankur, for a second, you sounded like a political leader. Products are built for the people and by the people. You know, oh my God.
No, I'm in the Netherlands to avoid any political discussion.
Yeah, no, I was joking. I was just pulling your leg, man. Don't worry. So, next one, right? I mean, you see a lot of partnership announcements coming up every single day, right? I mean, what the Visa with Anthropic, and then somebody else with somebody else. You know, so it keeps on coming up, right? But then somewhere in a bank, the CFO starts screaming, where is my revenue going to come from, right? It's a very tricky situation. So again, let me start with you, Lawrence, because it's a very pertinent question for you coming from ABN AMRO. How do banks can monetize with these kind of partnership ecosystems?
Yeah, it's a good question. Yeah, so there's a lot of partnerships out there. I think the word partnership also lost its meaning a little bit in my mind. So I always try to find out, like, is this really a partnership indeed where we're actually on a commercial trajectory together, or is just us buying software and then let's call it procurement? But yeah, I think what I see in my own organization is that on the one hand, you see the AI transformation, you see that we need to speed up and we need to rely on partners because we don't have technology and we're never going to build it. So there you need to work, but there you also need to invest. And this is also what you see now that people are saying, like, all the AI pilots fail, their business case is not working, etc. So this is a little bit the cost part of it. And simultaneously, you see that we're also really mindfully looking at, like, okay, so what can we actually bring to scale, and what is then the business case and why? So there's a lot more discipline also because of AI now in the organization, like, because people learned, I think, from cloud, and this is your cup of tea. Everybody thought that, okay, cloud, that's going to be amazing. We will move everything from mainframe to cloud, and then we'll be fine. And that turned out to be extremely expensive. And yeah, I think banks realized this could be the same with AI. So now it's a lot of pilots, lots of experimentation, and yes, with partners, but only scale if the business case is really, really there.
Ankur, coming to you, you're on the other side of the coin. What do you think about it?
I'll keep this one brief. So prior to N26, I spent some time at Capital One in the US. And they were, I think, one of the first, and at least in the US, first large bank to be fully cloud. I think going back to this point around North Star, and I completely agree, it's very expensive. It's a long, I think the word digital transformation might be one that many of you spend time in or hear about in your organizations as well. However, I think with clear focus and kind of a long-term view on solving for the needs of tomorrow, not of yesterday, these are inevitable. And so I think from my perspective, again, going back to, I might have lost the, the point here, but I think, yeah, just that would be my, like, let's say, quick point here.
Thank you, Ankur. Parth, so you're in the kind of, subtle middle of the whole thing.
Yeah, this is our bread and butter, right? Partnerships and monetization are two very different things. I think of partnerships as a, I put it into two buckets. I think there's partnership for branding. You play the volume game, you improve each other's branding, but you barely make money. If you get a better deal somewhere, just your partner's going to move, right? There's no stickiness there. But it's a great branding game. You're not making any money, but your reputation is getting better. Your branding is getting better. You're getting more recognized. A lot of the partnership deals that companies do are mostly for branding. It's a controversial statement, but it is true. It's very hard to monetize these kind of partnerships. But the other side of partnerships, I think if you price it just for volume, it's going to be tricky because it's not a long-term sustainable income. I think how we try to price this is with data. The closer you are to credit data, the closer you are to FX data, that is where you make the spread. The credit spread, the FX spread, the embedded services spread is where you make more and more money, right? If you partner with Shopify, they're going to pump huge volumes, but they're going to ask for a deal that basically is not going to make any money for you. But if you try to do Shopify Capital and you try to price the credit risk, and then you make money. If you want to work with companies that do cross-border payments and you price for the FX spread, that is where you really make money. And those partnerships are mostly silent in form, right? They're the money-making ones, they're the sticky ones. They may not generate a lot of branding. So if you look at a typical partnership portfolio of a company like ours that do infrastructure banking, the big bulk of the partnerships is just for branding, and then there's the ones that bring money.
Thank you. Coming to the last question, actually, it's very, very important for all of us here. So I want to get all of your thoughts, all three. I don't want to miss any of you, okay? So from a product design perspective, right? So fintechs have taught what's a good product like without even looking like a product. Very intuitive, customer experience, fluid, poetry in motion, whatever you want to call it, right? So what sort of lessons learned from that process? Because you three are coming from different angles, right? A big bank, neobank, and a payment company, fintech, right? So again, start with Lawrence. What are the lessons learned, do you think?
Yeah, I think you already said it, like trust, right? I have exactly the same anecdote. We once designed a one-click or one-minute mortgage process. Nobody liked it. Clients were like that amount of money in 1 minute. So you had to build in delays. So I think yeah, it's funny, but it was actually true. It's like the clients don't want a 1-minute mortgage process. It's just they don't want it. And yeah, indeed, like usability. I think that the bar has raised dramatically by Apple. I want to have a little bit of a different take because going back to the agents, I find it funny nowadays that people still talk a lot about UX and it's important, but I think your agent doesn't care, right? And I learned this from David Birch, and I think it was really insightful for me. Because indeed, if you're firing up Claude and you're going to ask like, okay, what's now the best bank in the Netherlands for a mortgage? Like Claude really doesn't care like how your website looks, and that also got me thinking. Like nowadays, I think it's more important for banks to think about like how is agentic AI going to find me? So, and that's also about data quality, about data availability, about all of that. So I think maybe UX isn't that important anymore, or not as important as it used to be.
Fair enough. Thank you for that. Ankur?
Yeah, absolutely. I think that as I was mentioning, I think the world is changing. I think, what you shared really resonates with me, but maybe I would view it slightly differently. So if I could, I think how user experience or the experience of the customer continues to exist. The interfaces or the distribution channels in which they consume information might change. So maybe they're in Gemini or Claude accessing information, and therefore your website front screen doesn't matter, but it's actually the content that's coming through. So portability of data is quite important, as you're mentioning. I think if we think about, I often think about friction, like some friction, like this one, you were giving this great example of the 1 minute mortgage, and you would think people would be excited about it, but they're not. But I think that it also comes through with a lot of topics, right? So whether it's I've gone through the KYC flow at ABN AMRO as an example, and so forth. My general feeling is that you want trust. It's not about simple or less screens or one screen or 3 or 1 minute or 1 second. It's about trust. And if you're communicating trust across that process and the customer feels that trust, then that's a trust building moment. Otherwise, it's a trust breaking moment. So again, I think like if all friction is not bad in banking, let's call it, but maybe the last thing I'll share, and maybe it goes back to that partner point that I lost earlier, coming back to World Cup and my big fandom of the Dutch football, Oranje, is total football, right? So this concept that we are all in different positions and roles, and those are, my maybe point would be, they're actually evolving very quickly, and the needs are changing. So whereas I played soccer, you call it football, in high school, and I wanted to play striker, and I played striker because I like scoring goals. But my coach put me on defense because that was the need at that moment in time. Similarly, I think as we think about partners, it's a whole team effort in order to build a bank. So N26 certainly doesn't do it alone. We are relying on many, many different partners across our entire stack. And even within our teams, I think the roles are becoming more fluid than ever before. So a product manager, we just had someone who is a UX designer and is now recently interviewed for and joining the team as a product manager. I can't tell the difference between the roles. My point being that I think in real time things are changing. The distance between like different roles and functions are in some areas reducing. And I think it's important for us to just adapt and not really focus on creating a rigid job description that says this is the exact profile that we need, but rather hiring for people, the talent of the people, and find their superpowers with guardrails around the strategy and the functional job families. But if you can really unlock the super value or the superpowers of each individual, then together, each of the ambition of the individuals leads to the ambition of the company and the organization and of the customers. And if you can create this motivation, I don't know, my favorite question to ask anyone I meet is what motivates you? And I asked this in Bunkersdag, sorry, one last, I'm probably running out of time. Bunkersdag over the weekend. I met someone, they opened up a bunker for the first time in 81 years, down closer to the border in Belgium. And I asked him, he was doing Morse code and a bunch of cool things. I said, what motivates you? Right? And he was explaining a lot of data and stats, and I couldn't keep my track. But once I asked that question, he shared what was actually driving his motivation to do what he does. And then you realize, wow, you can see the person's superpower, and you can see why they're so passionate about what they do. And if you can do that for your customers and for your team, I think you build an amazing business.
Thank you. Parth, quick comments, please.
Yeah. I tend to think of it in 3 parts. As a product person, I think trust, data, and focus. And I'm going to explain these 3. Trust. I think you both highlighted, right? Trust is super important, but how do you build that trust and how do you maintain that trust? I think as product people, we all tend to build a lot for happy experiences, but it's the unhappy experiences that define trust, right? How do you build for unhappy experiences? And depending on who your customer is, if you're a fintech consumer banking app versus if you're somebody like Adyen who's building for developers, or we also have a agent experience. So if agents are working with you and you're building for agents, the unhappy path defines your trust. How your UX is when you hit an unhappy path and how quickly you're able to resolve it will define trust and will define continuity. So that's the first one. And when I work with my product teams, we actually bucket all of our products into these 3 and make sure that we are building for all 3. I think the second one is data. I think where fintechs like us shine is that we sit on a humongous amount of data. Everything that our customers do with us is tracked. Every small micro movement. I work in the cards team, so it's ISO 8583. The ISO 100 message has several fields, and we track every single one of them, and it gives us insights and analytics from every single field and we are able to build customer experiences based on these data. And I think people undermine the importance of data and working with data to build customer experiences. That's the second one. I think third one is focus, right? Intentionally constraining a product into what you do best, right? Wise doesn't want to do 10 different things. They're focused on banking experiences with a focus on FX, and that's where they shine, right? The idea that you build around these constraints makes you a product that is really, really valuable. Take Monzo, for example. They started a prepaid card in the UK, and they just have spending notifications, nothing else. No extra jing-bang around, but it works because they know that their focus is something else, and they want to focus on that. So anything additional is not their focus area. So they are constraining their focus and narrowing down and doing what they do really, really well. So I think these three buckets are, in my opinion, critical as product leaders when we design experiences.
Perfect, thank you. I'll quickly wrap up. So 9 years ago, I was in an event in London, and one of the founders of a neobank, small bank, not very big at this point in time, but they're still around. He made a statement, and it's still stuck in my mind, actually. So he said, "We are Tinder of banking." I was like, wow, that's a huge statement to make in a public forum. But anyway, so from there, neobanks, fintechs, they've grown to key players now as part of the ecosystem, helping the big banks and financial service companies of today, right? So hence, today is not about, or the future is not about building biggest banks. It's all about building a seamless customer experience, a frictionless customer experience. And if it means you partner, any bank partnering with a fintech, or the fintech going partnership with others, so be it. So thank you, gentlemen, for the lovely insights today. Really appreciate it.
Thank you.
Thank you so much. Any quick questions? Couple of questions, maybe? Anybody? I know I'm between you and the coffee break.
Within partnership between banks and fintech, it is closer. Yeah, I mean that between partnership between banks and fintechs, it is banks who remains responsible for the before regulators. And my question, first of all, for Lawrence, taking into account your positive experience, what would you suggest to avoid or to decrease regulatory risk, I mean, third-party risks, which can be quite standard within such kind of partnerships? Thank you.
Yeah, it's a very fair point. So I think also going back to my presentation, like if you start working together, it should also be very clear like who bears what responsibility, right? And what I often see with the younger fintechs is that that's still a learning journey for them, and it's obviously often it's one of the strengths and one of the parts that the bank then will bring to that partnership. And that the other partner needs to be fully aware of, right? That has also a cost and a huge responsibility. Second of all, indeed, like as we're increasingly working with partners, and we have DORA, and we have all kinds of questions there, I think for banks it's critical, or any large organization, it's critical to invest into very innovative third-party risk management, right? I think nowadays people see this as something like, oh, this is something we need to do because of DORA, because of CISO. No, it's actually a strategic advantage if you can do this very, very well, and there's good solutions out there. And so my answer would be, don't see this as like, okay, we need to tick the box for the regulator, and we don't want any hassle with our partners. See it as a crucial capability to be able to operate in an ecosystem of partners.
Thank you. Lovely folks, you survived my session. So I don't want to be in between anymore. So a half an hour of coffee break, and then we'll resume with the next session, okay?